What's going on YouTube? CoinCapital here, and today in this video, I'm going to be talking about the top 5 best low-risk, high-potential, undervalued stocks right now for April. These are going to be 5 stocks that I think currently at current prices have high potential upside with very low downside, and have really been beaten down recently and are poised to go up in price, in my opinion. But these are stocks that are considered undervalued, look to be undervalued, and follow a lot of technical indicators pushing for increase in price. But the first stock I'm going to be talking about is ChargePoint Holdings Inc. with the ticker CHPT. If you don't know anything about ChargePoint, they are pretty big company within the electric vehicle charging stations, but mostly they are in California, and they provide EV station maintenance and management programs, as well as configuration services. And they were formerly known as Colombo, but yeah, they're one of the biggest EV charging station companies in the world, and they've really been beaten down on prices recently. If we look, they peaked all the way up to about $44 a share in January, but since the tech sell-off, have really come down to about $24 a share. And they've had a triple moving average crossover, which for short term is pretty bearish, but long term is pretty bullish. I think that the stock has no problem, I think, by like the end of the year hitting $50 to $60 a share. This is more of a long-term play rather than a quick get-rich trade. But their market cap at about $6.8 billion, with pretty decent financials compared to other EV station companies. With a sector industry like that, really at current prices shows quite upside, quite potential growth here with the stock. And I think it's pretty undervalued, especially for April, and long term, more long term than just a month. I definitely look into ChargePoint Holdings, check out their financials. They have an average volume of around 4 million shares, quite frequently traded stock. But I see no problem with this, gapping up in price after the sell-off. We've been seeing a lot. So before the recent, big push in November, they've kind of leveled out at that $20 to $25 price. And from what I'm seeing, I think this stock has no problem going up. So it's pretty undervalued. And the next stock I'm going to be talking about is another, EV charging / battery stock, and it's going to be the Starpeak Energy Company. They're doing a SPAC merger with STEM. They're pretty undervalued. I've seen some analysis say their share price should be at least $61 a share. I don't know about that, but they're currently sitting at close to $30 a share. They've maxed out, so they've hit $35 a share, back down to 28. This is a little less undervalued than ChargePoint, but nonetheless a great SPAC to look into. So it should be pretty interesting. They're merging with STEM, which is one of the best biggest battery operating, energy conserving companies. Not directly an EV play, but definitely not bad. And the great thing about this company is they already produce revenue, and they're on track to be EBITDA and cash flow positive in the next several years. And when the merger is complete, I see like 40 to 60% increase in stock price by then. But their biggest competitors are Blink and ChargePoint. But I think it's a pretty safe play. There's not much downside with this SPAC. They kind of leveled out in price. People are getting used to it, and I should see this stock doing well. So the next company that I'm going to be talking about is actually another SPAC with the ticker sftw, and they're going to be merging with blacksky as a SPAC merger. And they announced this, and it will be completed by July 2021, which is pretty recent. But they pushed a lot before the tech sell-off and fell down to about $10 a share. And it's pretty interesting here. This SPAC has a lot to do with the space and industry. blacksky is a rocket company, and they have different rocket labs across the country, and they work with satellites as well. So a stock that I see in the long term having good upside, that has definitely been beat down in price, and just based on that, There's not much downside here because, you know, SPACs open up about 10 a share and they've hit about 10 a share after a recent big push. So I definitely look into sftw, you know, the Osprey Technology Acquisition Corp, for a nice push up. Low downside here, quite high upside and as well. So that's why I included that one on the list. And next up is going to be the Atlas Crest Investment Corp with the ticker ACIC. They very similarly pushed up very high in price, went from 10 to about, you know, 16, a little more, and fell back down to 10. So they're at break even point, and they're going to be merging with Archer, which is kind of like a, if you want to think about it, it's an air taxi company, which in the future could be pretty possible. Right now it's more of like a non-revenue, non-profitable idea, a very speculative, but just based on price, I think it has upside because of the recent sell-off and decrease in price. But you know, they plan to take them public, and they first came public in October. So you know, they've raised $500 million, 50 million units, $10 each a share, and they're at about that $10 price now. So no doubt about it, the stock has really been beat down and has the upside that we're looking for with pretty low risk. Finally is going to be Citadel with the ticker cctl, a stock I like to talk about a lot. Has really been beaten down recently. They've had they gapped up about 400% recently, you know, about less than a cent a share, all the way up to 3 cents plus a share, and now they've fallen back down to a cent a share. I still think right now it's not as undervalued as one may say, you know, but with an average volume of 130 million shares and in pretty undefinable market cap, I think this stock has really, you know, been beaten down. But they've gotten more units for mining. They're actually a crypto mining and Bitcoin holding company. They have over 500 Bitcoins apparently, which for a company like that with great mining services coming out of upstate New York, with cheapest prices in for hash rate in America, I don't see why this stock should really be beaten down like it has. But at this price, I think it's kind of leveled out. People are more comfortable with it. There's, you know, more similar volumes here, a little less than there was in that big push, but definitely a stock I'd be looking at now for, you know, a sell-off and undervalued in price. And a lot of these stocks are dependent upon the market itself moving up. These are very, you know, a bullish market, you know, dependent stocks, not extremely independent companies. But other than that, thank you so much for watching. Make sure to like, follow, comment, and subscribe. Check out my TikTok and Instagram at coincapitalyt. Thank you so much for watching. I'll see you in the next video.